Hello, my friend. Rob Smith of the In the Black Quant Edge VTF here, T3 Live, with the second video of the Quant Edge 4-week coaching program. Week 1, where we're discussing actionable signals. While you take time to read this disclaimer, from video 1, remember, an inside bar must close inside, or the equilibrium is still forming. Very important. And the rev strat must follow an inside bar. That is what we are reversing. We're reversing the equilibrium of the inside bar. And now we can move along. In the last video, we got through candlestick formations, inside bars, and the rev strats. Now we move on to the importance of what we call the flip. Okay, if we move along here to, here's the flip, section 4. The importance of the flip concept. The flip is what we call the changing of the new hourly bar at the bottom of the hour. Although some charting software updates at the top of the hours, I highly recommend one that does at the bottom of the hour, right, for the following reasons. First, although some may say the final hour of trading is the most important hour of the day, that is false. The opening is what is more important. The opening hour is more important because it sets up a benchmark on which we can gauge direction. Which direction are we going from the opening? All right, for the rest of the day. It's also not as important as only the U.S. market. Not only does the U.S. market open on the bottom of the hour, but we have European markets close on the bottom of the hour. We have the crude oil closes at the bottom of the hour. And what that does with Europe closing creates a liquidity event. All right, once Europe closes, we're the only game in town. So we want to be aware of the bottom of the hour. That's what we call the flip. All right, because it's now a new 60-minute bar. Futures and futures-related stocks, the weekly oil and gas inventory numbers come out at the bottom of the hour, as well as their pit closes, right, when we know about that. It's also important because it's the only time when a major time frame signal can be created during the day, during the trading day. Unlike the monthly and weekly daily signals that would need to form, right, as we talked about before, and then trigger after the respective time frames have closed, the new month, the new week, the new day, the 60-minute signal can form and trigger during the same trading day. Right? So we can go inside on the 60-minute and form that equilibrium during the day and trigger in the same day. That's why the flip is very important, because every 60 minutes we want to see if we are setting up new actionable signals on which we're going to be able to trade off of. It's also important for time frame continuities when we get to the next section. For right now, we're still focusing on actionable signals. Section 5, combos, combinations. Increased probability by having separate participation groups trigger others. We always look for combinations of actionable setups. All right. By participation groups, I mean the representations of different time frame charts. So anybody who's traded whatever we're looking at during this month, the present month, is the monthly participation group. Anybody who has traded it this week is the weekly participation group, etc. Anybody trading today is the daily participation group. And that's why that 60 minutes is important. It represents a 60-minute participation group. We look for either a combination of actionable signals where one triggers the next and so on. One group will trigger the next. Or once a longer-term signal is in force, additional actionable signals to reconfirm the signal. Remember, anytime that these actionable signals are above those triggers and are in force, they are still good for that entire time frame. So an actionable signal in inside month, bullish breakout to the upside, so long as that is triggered, we have all month to look for additional signals. So if we look for a combination here, this is going to be a little tight to see, so we'll go nice and slowly. All right. This here's the IBB. Okay. You can be able to see how the inside 30 down triggered the daily 1-bar rev strat down, as well as triggering the inside weekend down. As an example, how the shorter term participation group triggers the longer term groups. This is very important. This is the crux of how this works. 30-minute group triggers the daily, triggers the weekly. So what do we mean by that? It's a little tough to see, so we're going to go slow here, but this right here is 30-minute bar. And you can see this inside. it breaks the inside bar to the downside. By doing so, it was an inside bar. It's tight to see, right? But it is an inside bar, and it slightly took it to the upside on the 30-minute when it did this. On the 30-minute, it slightly took that to the upside. So remember, the 1 bar rev strat is going to reverse that inside bar to the downside in 1 bar. Therefore, if this goes 30 down, this combination will trigger the larger daily group by going 1 bar rev strat to the downside. This is really tight to see, so you're going to have to take my word for it. It was an inside week. All right? This 30-minute break, right, the intraday participation group, causes the rev strat of the daily. At that point, the daily and the 30-minute group then trigger the weekly inside bar break. All right? The 30-minute group causes the rev strat for the daily group. The 30 and daily group then trigger the weekly group equilibrium break to the downside. In this next combination, the daily and weekly inside bar breaks to the upside are already in force. And this is what I'm talking about, not just always causing it, but the reconfirmation. And the 15-minute momentum hammer reconfirms those breaks. What does that mean? That means this inside day that breaks to the upside here then triggered the weekly participation groups by taking the inside week to the upside. So oftentimes people misconstrue that they have missed this move. All right? They didn't get the initial break on the day. They didn't get the initial break on the week. That's not true. These are still this signal is in force for the rest of this day. This signal is in force so long as the week is still the same week and is above the previous equilibrium weekly high, which then gives us the opportunity to look for reconfirming signals. In this case, the momentum hammer here, which goes in force above the hammer. At this point, we have 3 actionable signals in force, thus the combination. Combinations may also occur not just in various time frames and setups in one stock, but across asset classes as well. When the broader averages, key each sector ETFs, and most stocks trigger actionable signals in the same direction, it's known as a simultaneous break. This is one factor that makes the flip so important. On each flip, we can evaluate how many new potential 60-minute actionable signals have formed. Oftentimes, we'll see a simultaneous break across the broader averages, where we'll have the S&P, the Dow Jones Diamonds, the small cap IWM, maybe QQQ, all go inside 60. All right? All go inside 60 at the same time. So once a few of them start to break, we can expect the rest to follow suit. Everything is simultaneously breaking in the same direction. All right? Can you trigger? We can do so. Others will follow, right? Major equilibriums broke. This may occur across the broader average or be sector specific. So if it's the broader averages, right, breaking to the downside, simultaneous break to the downside, we can at that point also look at all the stocks that are already in force to the downside, because there's no reason to believe they're going to reverse when a simultaneous break occurs to the downside. Conversely, if we have all these 60 minutes or signals breaking to the upside in the broader averages, we can look for stocks that already have actionable signals in force to the upside, because there's no reason to believe that they would reverse at that time. Oftentimes we'll have a sector-specific simultaneous break. What that means, all major signals break in the same direction for a major sector ETF, as most or all of the stocks follow suit. So what does that mean? What that means is sector specific, say FAS for the financials, XLE for the energy names. If all of these line up with actionable signals breaking in the same direction, it's called a simultaneous break. It's very important because we can see everything breaking in the same direction. So the participation groups in each one of those is helping to trigger the others, because it's triggering the ETF, it's triggering each individual stock. Simultaneous break. Oftentimes this will occur at the beginning of the month or the beginning of the week. The beginning of the month, because there'll be new allocations for institutions going into certain things. Oftentimes, the beginning of the quarter can be a very strong day, right? Because a lot of institutions will be coming in to buy their new quarterly allocations, and we will see the monthlies, the weeklies, the dailies, and the 60s all breaking in the same direction. As far as the flip is concerned, that's what we're looking for, an intraday simultaneous break, which means it's the 60s on their own are breaking. And we can take those longer term time frames to see if that's confirming or negating what we know to be true. If the market is already going up and we have a simultaneous, and by going up, I mean defined by on all time frames going to the upside, and most actionable signals are already triggered to the upside, that's reconfirming what we already know to be true. If the most actionable signals are triggering to the upside and the 60 breaks to the downside, all right, that's negating what we know to be true. Actionable signals are going to continue to confirm or negate each other, right? We want them to confirm. This will be more important as we get into the discussion of time frame continuity. Section 6, the measured move. Although highly correlated with the other truths, oftentimes we look for actionable signals to trigger a measure move. This occurs when an actionable signal triggers after the price makes a quick advance or decline. So what do we mean by that? The measured move. It represents a brief hesitation before the strong trend continues. It is called a measured move because we can gauge the magnitude by using the previous move, then projecting that to the next move will be of equal strength. So what do we mean by that? You'll see the strong down move, right, inside bar, then triggers equaling this move. This is the measured move. This distance will be then traveled here. Now this will also be affected by time, right? However, when we combine the other universal truths, we will have higher levels of probability on when this is going to work and occur in this manner. The importance of time, section 7. Although we will cover time in the next video, when actionable signals trigger is important. Ideally, we want actionable signals to trigger as soon as possible. The reason for this is that because it gives us more time to get reconfirming signals to enter or add to our position, just like we just previously saw. All right? Because actionable signals are only in force while the triggering bar is still open. The closer we are to the end of the time frame of that bar, the less time frame we have to work the signal. So just like those examples I just previously showed you, so long as that monthly break is in force, we can look for those shorter term weekly, daily signals. Now, if we only have 1 day left in the month, that doesn't give us a lot of time to work with. So ideally, we want actionable signals to break as soon as possible. The turnaround Tuesday phenomenon. If you've traded for a while, you may have heard this term. I'm sure you have. Turnaround Tuesday. When the market goes one way on Monday and turns around the other way. We know why this works. We know why this happens and how to quantify it. Right? Basically what it is, it's a combination negation reversal. When I talk about signals confirming or negating the move, because all actionable signals will confirm or negate what we know to be true about price direction. Monday night's inside days and rev strats are what causes this phenomenon. For instance, let's say the market is up on Monday, took out previous Friday's highs, was strong enough to take out previous Friday's highs. Any ETF or stocks that formed an inside day on that Monday were therefore too weak to rally with the market. No one can dispute that. They weren't strong enough to take out the previous highs of Friday when the market did. So should the overall market start to give up those gains on Tuesday, all of those names are actionable signals that suddenly trigger to the downside. That's what triggers the reversal break. We know that, all right? That's the guts of a turnaround Tuesday phenomenon and why it's important when things happen to confirm or negate. What it's doing is negating the initial move of Monday. And that's why when we get to time frame continuity, we will talk about the importance of the second week, the next month. All this stuff matters. But for right now, it's the actionable signals that we want to focus on. And that's what causes the turnaround Tuesday, the inside bars and rev strats of a Tuesday that negate Monday's move. So once again, summation. It is very important to remember that we do not have to catch every actionable signal as soon as it breaks. Right? That's when people first come to me, that's a common misconception. You do not have to catch the initial break. Right? Although we enjoy those combinations, as I showed you, where one group will trigger the next. And our go-to buy and sell list, if you will, is a list of all stocks that have actionable signals in force. So once again, this means so long as the monthly setup is in force, we have the rest of that month to look for additional actionable signals on shorter-term time frame to reconfirm that break. This is also true for all actionable signals. If the triggering bar of an actionable signal is still live, we can look to trade it. It's a matter of how much time do we have, right? It's all very important stuff, all right? So once again, we started off with understanding that the bars must close, all right? We understand that a rev strat must follow an inside bar. The importance of the flip as it pertains to an intraday actionable signal. The importance of combinations to cause one participation group to cause another participation group's actionable signal to trigger, as well as reconfirming actionable signals that are already in force. A measured move to help us gauge magnitude, which we will touch back on as we get into the other truths because they matter in that case. And the importance of time on when things occur, which we will also be covering further when we get to the other universal truths. So in this next video, we're going to look back a little bit at the historical significance of these signals, right? And then get to what's happening now. Because when I'm pointing this out to you, I want to show you recent history, how this has played out so often, so you can visualize it and see it what really happened as opposed to just these examples. This concludes video 2. I will see you in video 3.